Hey, you. Yeah, you. Are you tired of hearing about other people getting rich while you stay stuck in the same financial cycle? Do you scroll through Instagram, seeing influencers flaunting their lifestyle, thinking, how do they do it? Well, I'm about to show you exactly how to build a powerful investment strategy, even if you're just starting out. And guess what? It's easier than you think. Stick around, because by the end of this video, you'll have the tools to transform your financial future. But first, I need you to stop scrolling, put down that phone, and pay attention, because you're about to change your life. Let's dive in. First things first, let's talk about the foundation. When you're just starting out with investing, it's easy to feel overwhelmed. You might be wondering, where do I even begin? Stocks, real estate, cryptos. It's confusing, right? Here's the deal. If you want to succeed, you have to start with clarity. This means understanding your goals, not just short-term gains, but long-term wealth. Are you in this for financial freedom? A comfortable retirement? Or are you just hoping to make a quick buck? The key here is setting specific, measurable goals. Don't just say, I want to make money. That's not clear enough. Define your goal. Do you want to have $100,000 in 5 years? Or maybe you want to generate passive income so you can quit your job and live life on your own terms. The more specific you are, the easier it'll be to choose your strategy. But here's the catch. If you don't have goals, you're basically driving blindfolded. Let that sink in. Okay, so now that you've set your goals, let's talk about the secret sauce of every great investment strategy: diversification. Imagine you've got all your eggs in one basket, let's say, all in one stock. Now, picture that stock crashes, bam, there go your savings. Terrifying, right? Here's the truth. The stock market isn't a magic bullet. It's volatile, and yes, it can be a wild ride. But if you're smart about spreading your investments across stocks, bonds, real estate, even some alternative assets like crypto or peer-to-peer lending, you'll balance out the risk. You're building a safety net. And don't get complacent. Diversification doesn't mean you throw a bunch of random things together. You need to invest in asset classes that move in different directions. Like, stocks and bonds often react differently to economic shifts. When one drops, the other may rise, keeping your portfolio stable. And guess what? It's a long-term strategy that works. So, the real question is, are you ready to risk it all in one asset? Or do you want to be smart about it? Let's talk about something most beginners forget: time. Time is your best friend, but only if you're patient. This is where the magic of compound interest kicks in. Here's the hard truth. If you think you're going to get rich overnight, you're going to be disappointed. But if you invest consistently, year after year, guess what happens? Your money starts working for you. It's like planting a tree. At first, it's tiny, and you might feel like nothing's happening. But over time, that tree grows, gets stronger, and eventually bears fruit, big, juicy fruit. The earlier you start, the more time your investments have to grow. Compound interest is the reason billionaires sleep at night. They know their money is multiplying while they're not even working for it. So, I want you to ask yourself, can you handle the weight? Because if you're in a rush, investing isn't for you. But if you're ready for the long haul, this could be your path to financial freedom. But hold tight, because there's one final key to making your strategy work. Alright, here's the deal. You can have the best strategy in the world, but if you're not consistent, it won't matter. Consistency is the killer app in investing. It's like going to the gym. You don't get results after one workout, right? The same goes for your investment account. You need to invest regularly, whether the market is up or down. Set up automatic contributions, small amounts that go into your portfolio every month. The consistency helps smooth out market volatility and keeps you disciplined. Look, investing is a marathon, not a sprint. And trust me, those who stay the course, even during tough times, are the ones who come out on top. What if I told you that there's a way to maximize the power of consistency, and it doesn't even involve stocks? Stay tuned for the big reveal, alright? Here's where most people really mess up: tax-advantaged accounts. Whether it's a 401k, Roth IRA, or HSA, these accounts allow you to keep more of your money, and who doesn't like saving on taxes, right? If you're not using these accounts, you're leaving money on the table. For example, if you contribute to a 401k, your money grows tax-deferred. That means you're not paying taxes on your gains year after year. Talk about a head start. The Roth IRA. You get to pull that money out tax-free when you retire. So, if you're a 20-something with time on your side, this could be your golden ticket to financial freedom. But the thing is, not using these accounts is like setting fire to your hard-earned money. Why pay taxes unnecessarily when you could be making your money grow faster? And trust me, when you start taking advantage of tax breaks, that's when the wealthy take notice. So, let's wrap this up. We've covered the fundamentals: setting clear goals, diversifying your portfolio, understanding the power of time, being consistent, and using tax-advantaged accounts. But here's the most important takeaway: start now. The sooner you take control of your finances, the sooner you'll start seeing the results. And hey, if you're feeling a little overwhelmed right now, don't worry. The key is to take it step by step. You don't need to be perfect. Just start, learn as you go, and keep pushing forward. You've got this. Your financial future is in your hands. So here's my challenge for you. Pick one thing you'll do today to start building your perfect investment strategy. Maybe it's opening a Roth IRA, setting up automatic contributions, or researching different asset classes. Whatever it is, just take action. Remember, the best time to plant a tree was 20 years ago. The second best time: right now. If you want more tips on personal finance, don't forget to hit that subscribe button and drop a comment telling me which strategy you're going to tackle first. I want to hear your thoughts. Let's build wealth together.